DowDuPont's long-awaited three-way split is now complete. The agri-focused Corteva, as we call it, David, is set to begin trading today here at the big board. And joining us now, pretty exciting, exclusively, Post 9, DuPont's executive chairman, Ed Breen, and Corteva's Agriscience CEO, Jim Collins. Out of deference, Ed, I'm going to start with you. How are we doing versus the initial merger of Dow and DuPont in terms of value creation?
Yeah, so it's interesting at this point in time. We clearly have some macro issues affecting the companies and affecting a lot of our companies. But if you look at the underlying metrics throughout all three of the companies now, Dow, Corteva, and DuPont, pretty much every metric has improved significantly. Just one number to point out is we've taken $3.6 billion of cost out of the three companies. So we now, if you look at benchmarking of the three companies, we benchmark best in class to any peer company you want to compare us to. So, and while we're seeing some softness in the business, maybe just to point to DuPont, a little bit weaker revenue last quarter, but we clearly had gross margin improvement of 20 basis points and EBITDA improvement of 90 basis points. So the underlying business, the way we're running it in all three companies, is significantly improved for us. But
there was a bit of bad luck. I mean, obviously, you're in cell phones. You have a great, maybe 5G is a good story. You're in what I would describe as being some auto, some you're caught in the tariff war. What is the story here in terms of a business person trying to work in this particular environment?
Yeah, so I'd say the biggest thing, Jim, is the China tariff issue, and actually affecting all three of the companies because of our presence in China. So DuPont, about 20% of our business is being affected right now, and it's exactly what you said. It's high-end smartphones and auto. And we think that persists a couple more months here of the destocking that we're going through. But if you really take the DuPont portfolio, because we touch so many end industries all over the globe, it's those two. It's isolated to China. The consumer in China really slowed down spending on big ticket items. So we've kind of got to live through that for a little bit of time right now.
Ed, I just want to. You've got a disappointed group of shareholders who, for 3 years, watched this thing proceed and have said, what happened to the value that you were supposedly creating with this $3.6 billion in costs that you were taking out? I remember the deal when it was announced, $3 billion or more in synergies. Corteva's withdrawn guidance. They look at Dow and DuPont in terms of where the guidance is right now. I understand margins may have improved, but they want to know what happened. Where did our value go that we were promised?
So look, it'll play out over time. All three companies are positioned as best in class. If you take the best peer companies in the industries, I mean, Corteva is the second largest ag company in the world now and the most balanced portfolio of any of the companies with the best pipeline coming out. DuPont benchmarks right at the top of the peer set with the 3Ms, the Honeywells, the ITWs. Our EBITDA margins are 28%, which is right at the top. And the Dow company is a much more focused material science company. It's going to have a huge payout to shareholders, which is the way a cash company like that should be. So look, macro issues will clear. It's macro issues affecting right now. It's weather on the ag side. It's the tariff issue on the Dow DuPont side. These things pass. And you know,
so it's not delivering on what you had promised.
Absolutely not. And by the way, the second go around when I split up Tyco, we had 08, 09. I didn't stop to split up a Tyco because it was strategically the right thing to do for the long term for our shareholders. So I just came off a 3-week roadshow. I visited every possible shareholder there could be, and I'd say they're pretty excited about what the next 5, 6, 7 years is going to look like for these companies.
Let me ask Jim. I know that people say there were 3 weeks ago you had a forecast. Then you might have withdrawn it. I'm not clear about that because corn prices have really exploded to the upside just in a very short period of time. Cannot that be good for let's say 2020?
Yeah, Jim, it's a great question. You know, it's one of the reasons why we said we weren't going to update guidance last week, just because of all of the uncertainty that's out there. There are some negatives, as you mentioned, but there's some real positives starting to show up. Corn prices will be one. We have a really strong business in Latin America in the second half of the year. In Brazil, that summer season, the safrinha season, our market shares there are just tremendous. We'll benefit from that. And as we get into the fourth quarter of the year, we start pre free selling seed into the 2020 market for North America, which is shaping up to be a really strong one. So I agree with you.
It's important. Now, David talked endlessly and correctly about the problems of your largest competitor in terms of legal issues. Now, I know that in all businesses, it's not like Boeing's going to trash Airbus, but just actually on your numbers, does it matter about how hobbled your chief competitor is?
You know, these lawsuits are more related to the home use market and not the professional customers that we deal with, these large growers.
You get distracted. You and I are business people. We know that you get distracted in these things. You can't even get your head up sometimes because of lawsuits, which have been very bad.
Yeah, I understand. You know, this is an important tool for our growers. We remain very focused on that as a complementary part of our portfolio, but it's a very small part of the product line that we sell. And we've got one of the best pipelines in the industry coming forward. So no matter how all this turns out, we're going to have a number of choices for our customers to be able to support them in the future.
And back to global growth. I mean, I think the second half of this year in terms of your guidance is where you started to point people towards more growth or ramping up, I guess. Can you be confident given what we're hearing and seeing with tariffs now potentially on products from Mexico? Is it concerning you?
Yeah, sure concerns me. And I was at 2 conferences last week with a lot of the big CEOs of companies, and I think people are incrementally more concerned. I think as a group, though, all the CEOs want to have fair trade around the globe. We want to have intellectual property protected around the globe. So on the other hand, we want this issue to get resolved sooner rather than later. This tariff thing lingering on, I don't think is healthy. And it's not affecting us in the supply chain. For DuPont, it's only $50 million effect from the tariffs put in place. And if more tariffs go in place, there's really little effect from that. The real issue is the confidence of the consumer. And do we talk ourselves into a downturn here? And that clearly has happened with the consumer in China. So how
long have you been seeing that for in China?
Since December. The business on the high-end purchases, whether it was homes, smartphones, or autos, started really precipitously dropping in the middle of December. So 2 dynamics happened through this. You have to get through the destocking, which takes your business down even further because you got to get through that excess inventory in the chain. And we'll work our way through that. That will help lift our numbers in the second half of the year, and raw material headwinds will go away from us, which are $200 million in the first half we won't have in the second half. So we'll see that lift. The issue we don't know exactly is what will the volume of sales be on autos in China and smartphones, and that we'll just have to wait and see.
No, Ed, let's go back to something you referenced, which is Tyco, which was a tremendous success, and you did it during a bad period. And I want people to know at home, you've been what I would regard nothing short, I've said this, as a miracle worker. And now I got to wonder, do you have optionality for what's left with DuPont? It seems like there is, I don't want to call them strays, but there are things that you could bring out that I think have more value once you brought them in. So I guess what I'm asking is your work done?
Well, it's interesting, Jim. The DuPont portfolio, I love the way it is. It's a great multi-industry company. We can run it very well. We've run it very well this way for about 3 years now. The beauty of the DuPont portfolio is we do have optionality. And just to point one out to you, we have the largest nutrition and health company in the world. It's about 30% of the portfolio. And those companies trade at 19, 20 times EBITDA. And DuPont clearly isn't going to trade at 19, 20 times EBITDA. So we have said very publicly, we will do what's right for our shareholders to create the best and longest term value for shareholders. And that's if we want to do something with the portfolio and not keep it the way it is, we will clearly look at that if that's the right path to go down.
And back to Corteva for a moment here, obviously, which is going to be now will be its own separately traded company. You're still talking about accelerating synergy delivery of more than $50 million in the back half of this year, which I guess starts a month from now.
Absolutely.
And you're confident in those numbers and the 5 to 10%, I think it is, EBITDA growth that you're targeting over time.
Absolutely. This is a great example of, despite some of these market headwinds you've been talking about, we're really executing on all the levers that we have in our control. And one of those is these cost synergies. $1.2 billion from the time we've started the merger. And the teams are right on top of every one of those projects. So we got good visibility, and we can pull some of those forward to really help us out in the second half of the year. So we've announced some additional productivity initiatives that will also help give us some additional tailwinds as we go into the start of 2020.
So no second thoughts from you at all, 3.5 years later, now that you're finally, this company's finally
Dow Chemical to 6% yield, that was something we never saw. The Dow turned out to trade with oil.
I mean, it's been a long road, hasn't it, Ed?
Well, 3.5 years is a long time, but for me, it's been pretty exciting. And by the way, just to that point, putting Dow out there with this kind of yield and payout puts them at the top of their peer set, and I think that's pretty exciting for investors.
Gentlemen, thank you.
Thank you.
Very much appreciated.
Thank you, Jim. Thank you.
Yeah.
Good to see you.
Thanks for having us.